What will happen is, and I've said this for years, is that silver, the fuse to the gold bomb. Gold is the antithesis of fiat currencies. It's kryptonite to fiat currencies. The problem, as I've seen it over the years, is that it's reversed. You should look at gold as, or you should look at dollars as 1/2600th of an ounce, and that's gone from 250th. I mean, back in 2000, 2001, gold traded down to $252. So here it is at 2,600. That means the dollar has lost not over 90% of its value this century.
Russia's central bank is set to diversify its reserve strategy by acquiring silver for the first time, as outlined in the country's newly released draft federal budget. This marks a significant shift from its traditional focus on gold, platinum, and palladium, reflecting a broader effort to navigate growing global economic uncertainties. As the world's eighth-largest silver producer, with an annual output of 38.5 million ounces, Russia is well positioned to leverage silver's undervaluation relative to other precious metals. Analysts view this decision as tactical and economic, particularly given silver's increasing industrial applications and its role as a monetary metal. Market analyst Bill Holter underscores the potential impact of Russia's silver acquisitions, suggesting that an investment of $250 million to $1 billion could deplete the limited supply in the market. Silver's small market size makes it highly sensitive to large-scale purchases, and experts predict such actions could drive prices up by as much as 50% over the next 2 years. This move could also inspire other central banks to reconsider their reserve strategies, further amplifying demand for silver as a strategic asset. Russia's timing aligns with growing challenges to the US dollar, which has seen a significant decline in purchasing power over the past 2 decades. Holter highlights that gold's rise from $252 per ounce in 2001 to around $2,600 today illustrates a loss of over 90% of the dollar's value. This decline is compounded by the anticipated introduction of the BRICS pay system, a new payment platform from the BRICS nations designed to facilitate cross-border transactions using a basket of currencies. J.P. Morgan has warned that this initiative could undermine the dollar's global dominance, further straining the U.S. position in international finance. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I mean, the pullback in gold is what, 6%, 7%? And
Right.
silver bigger, but silver's always more volatile than gold. I think it's interesting that a couple of weeks back, Russia came out and said that they're going to buy other commodities other than gold, and the first one they listed is silver.
Yep.
And I will just say that silver is such a small market where Russia to try to come in and buy, if Russia were to come in and try to buy 250 million, 500 million, $1 billion worth of silver, I think that would probably clean up any and all of available silver. So, whether they do that or not, to this point, Russia and China have pretty much let the U.S. go down the road to perdition on their own volition, rather than trying to push the U.S. off a cliff because they don't want war. Now, if Russia steps up and breaks the silver market, yeah, those could be construed as fighting words, and you'd have a war. My guess is that Russia's probably, going to pick away with smallish trades, $25, $50 million, just to turn the screws a little bit, but not enough to put it over the edge. The situation, the way it is right now, well, I think the last number I saw was there's 406 paper gold ounces or silver ounces for every single silver ounce that exists.
Really?
I mean, how's that even possible? Yeah, if you look at the contracts, the LBMA contracts, the COMEX contracts, there's far, far more silver represented by paper than there is silver. So it means the current monetary system as is will no longer exist. Because what will happen is, and I've said this for years, is that silver is the fuse to the gold bomb. And I mean, gold is the antithesis of fiat currencies. It's kryptonite to fiat currencies. And I mean, you can look at the dollar index, but that compares the dollar versus other currencies. What you need to compare the dollar to is, how many cups of coffee does it buy? How
Right.
many gallons of gas does it buy? How many ounces does it buy? And the problem, as I've seen it over the years, is that it's reversed. You should look at gold as, or you should look at dollars as 1/2600th of an ounce, and that's gone from 250th. I mean, back in 2000, 2001, gold traded down to $252. So here it is at 2,600. That means the dollar has lost not over 90% of its value this century.
According to market analyst Bill Holter, the global economy has been caught in a cycle of recovery without genuine expansion since the 2008 financial crisis. The reliance on excessive debt and deficit spending has artificially inflated GDP figures, masking the lack of organic growth and exacerbating systemic vulnerabilities. This debt-driven model has created a precarious foundation for long-term economic stability. A recent note from TD Securities highlights the looming implications of this trend, focusing on the U.S. federal government's escalating debt levels. Analysts project that structural deficits will drive the U.S. debt-to-GDP ratio to 100% in 2024 and 122% by 2034, reflecting a steep and sustained rise. Over the next decade, this increase is expected to add $22 trillion, or 85%, to the supply of U.S. treasuries. The U.S. dollar's reserve currency status continues to underpin global demand for treasuries, providing a temporary cushion against the mounting debt. However, TD analysts warn that persistent deficits coupled with increasingly price-sensitive buyers could lead to greater market volatility and upward pressure on interest rates in the years ahead. The implications extend beyond the treasury market. Elevated interest rates would increase economic borrowing costs, further straining government finances and private sector investment. Meanwhile, the rising debt burden risks crowding out critical spending, threatening long-term growth potential. Holter's observation that the post-2008 economy remains in a perpetual state of recovery underscores the systemic challenges tied to debt dependency. Let's get back to the interview.
It's not the turnover. It's not the speed of. It's the quantity. It's the quantity of M2. It's the quantity of. Just for example, last year, $2 trillion deficit that got spent into the economy and is part of GDP. If there was not a $2 trillion deficit, GDP would have been $2 trillion less. They've used them. They've used money supply like a fire hose and just sprayed it over the whole system because we've had these liquidity problems because there's too much debt and they have to reflate each time. So they have to keep borrowing more and more in order to put it into the economy, in order to, show, and they show nominal growth, but they call it real growth. But there's no adjustment for this debt that's being taken on, that's being pumped, into the real economy. I thought this on my own, just from a gut feel that things have not been right since 2008. And we know that a lot of the economic and financial numbers that we get, not a lot, probably the vast majority, are all bullshit. They're all made up. And then they adjust it 6 months or a year later and nobody pays attention to it. But I have felt that we never got past the recovery stage. Never got to. I can remember in 2014, 15, writing a couple articles that we never got to the expansion phase. We got the recovery, from the depths of the 2008, 2009 recession, but we never grew from there. The only growth that we had was spurred by deficit spending and money supply growth. You don't see the pictures like you did in 1931, 2, 3, lines going around the block to get a loaf of bread. Just stand at a checkout counter for 10 minutes and see how many people come through with EBT cards. Quite a few. I live in Texas, and I can tell you 15 years ago, 20 years ago, there was I knew the manager of a grocery store, and this was a border town. And he was telling me that something like 93% of all sales in his grocery store were EBT cards, or whatever they call
93?
them back then. 93%. Yeah. It was in Mercedes, Texas.
The evolving economic landscape highlights the shifting dynamics of global reserves and the challenges posed by escalating debt levels. As nations explore alternative strategies to bolster economic resilience, the implications for traditional financial systems and asset valuations become increasingly significant. What impact could the diversification of central bank reserves and rising debt levels have on global economic stability and market dynamics? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.